Welcome to Share Views with my co-host Stefano Barbaglia, who's Director at Cassiopeia Services, and by our guest this week, Randeep Groyal, who is Chairman and CEO of Green Dragon Gas. How are you today, Randeep?
Good, thank you.
Presumably the clue is in the name in terms of what your company does?
It does give it away, doesn't it? We're very green, we're exclusively in China, and we're exclusively in gas, so very simply Green Dragon Gas.
Right, and how have you been getting along? Because, presumably it's a massive market, and I understand that Chinese are don't have big amounts of gas hanging around, so you should have a decent marketplace there.
We do. Look, we've been at this for more than 20 years. We're bringing on board and de-risking 27 trillion cubic feet of gas. It's a lot of gas. We just released our reserve report for the 11th consecutive time, which is certification of what are the gas reserves. And certainly our valuations range anywhere between $4.5 billion in 2P all the way up to $17 billion net to the company's interest. So lots of gas in the right place, very large asset, and took a while to de-risk it.
Right, and it's always the big question here, how are we going to get from being a relatively small company to the next Royal Dutch Shell? Is that what's on the cards? I mean, how are we moving in that direction?
Well, we are China's largest, longest partner in the development of gas from coal. It is an unconventional gas resource, and it takes a very important technology development, which we spent $200 million developing. So we've got about $650 million invested with our partners that are CNOOC, CNPC, and PetroChina. The total investment exceeds about $1.3 billion into the assets. It's a large asset portfolio. And we are certainly we're at an inflection point where we're going from the de-risker of resources to the developer of technology to the application of technology to now gas production.
Does that mean the dirty work's been done? I mean, the heavy lifting has been done over the last few years. So for people coming to the Green Dragon Gas party now, there's not so much sweat.
That's exactly right. I wouldn't use the word dirty, obviously, because everything we've done is rather clean.
It's a metaphor.
There you go, exactly right. So you're absolutely correct. We are certainly at a point where we're now doing the same thing every day, and we're not having to develop new things. So we have gone from exploration, technology developing, to application. And the application is drilling the same wells, producing gas and selling gas, and the revenue stream has started.
And also I understand that the China's 13th five-year plan comes with the government commitment support to change the country towards alternative, more clean energy environment. Would you like to comment about that and also explain how Green Dragon is placed?
Sure. So look, China's a country in transition when it comes to the use of energy. It went through a very significant growth trajectory based on its resident reserves of coal, and it was a coal-based economy. But as the economy is now very mature, there is a migration that the future growth is on cleaner energy sources, which is frankly what every country's ever done, including here in the UK. And in that development, natural gas is the #1 focus for the government. And within natural gas, coal bed methane, which is the country's largest untapped gas resources, is what the country is incentivizing to come online. And that's where Green Dragon Gas is. We're at the right place at the right time, in the right country, where the government's commitment to developing coal bed methane is demonstrated over the last 20 years that I've been working there, with continued policy support, with continued subsidy that are provided to entities like us. So the two things coming together provides the inflection point. You must have government support on a project this big, and we certainly have it. The 13th five-year plan, as you correctly identified, is a great example of, again, what we have seen in multiple five-year plans since I've been there.
Right, I'm speaking of five-year plans, and most private investors have got a 1 or 2 year time frame as far as doubling or tripling their money. What are the milestones that we're looking at now? And the 20-year view is probably not what the viewers here are looking for. Are things going to start accelerating now in terms of your news flow?
So the answer is yes. We've had news flow every single month, and we have lots of news flow coming through. Where the five-year plan is relevant, even to someone looking for a quick investment and a return, is that the five-year plan reconfirmed that 4 of our 8 blocks are a national level interest with subsidy support being provided to us in cash monthly. So our operating costs are basically paid for by the government through a cash subsidy. So what we sell is net income, is net profit. And that makes a huge difference to us on a daily basis. Over time, the volume just grows because we are now producing a lot more gas month over month.
Have people appreciated that subsidy there, that you're being helped along in this way? Because if they were, I think presumably things would be rather different, wouldn't they?
You're exactly correct. I'm a bit surprised. We've been listed here in the UK now for 10 years. This is our 11th year. I'm a bit surprised that the core investment thesis around Green Dragon is yet to be understood.
You managed to keep that quiet for so long, until now.
Well, maybe we don't do a great job telling our story, but certainly from our perspective, the cornerstone to Green Dragon's success is we are a Chinese company operating under a national interest and subsidized agenda, which provides the bedrock and support of our success story.
The other point is that on the UK London market, some people are a bit suspicious or a bit cautious regarding China and companies doing business in China. What can you tell us about that?
Well, we are, frankly, the only success story there is operating in China. So I think the market's concerns...
The exception that proves the rule.
Precisely. But we've been saying this, and we've been dealing with exactly your comment a lot. I mean, there's more companies fail than succeed. But I'll tell you the difference there between success and failure in China is China's not a quick entry and quick exit. You've got to commit long-term to it, and you will get sustainable rewards over decades to come. And that's the difference. If people are running in there to make a quick buck, it's not your country. It's not the emerging market you should be in. But we're a great success story. We've been on the ground for 20 years. I can't say enough good things about the Chinese government. They've done a great job, certainly in our industry, providing the support. And here we sit with 27 TCF of gas coming on stream. So I think it takes the steadiness of the government to be able to achieve that.
And Randeep, if we come back to your last announcement about the reserves volume and the increase in the 1P, 2P and 3P reserve, can you explain a little bit more what does it mean and how you can translate that into hard cash?
So look, the 1 and 2 and 3P reserves, first of all, in our case, we've had them certified by the world's largest auditor for 11 consecutive years. Every February, the last Monday of every February for 11 years, we've released an audited report. We're the only ones listed in the UK stock market that actually does that on an annual basis. And that provides an independent view of what is the size of this asset, how is the asset developing year over year, and how should an investor risk that asset. In our case, we've seen steady growth of 1, 2, and 3P reserves over the last 11 consecutive years. The value today, net to a Green Dragon gas shareholder, is really conservatively the 2P value, which is $4.3 billion net to our interest. That is future cash flows, net of all expenses and CapEx, the net present value on a 10% discount factor over the next 10 years, certainly. It's $4.3 billion. So it's a very significant value. And what you will see is our 1P value, which is current production, is $1.3 billion US net to our interest. And that production is on stream as we speak. So we'll continue to grow the revenue. We'll continue to grow our production. The wells are already drilled. We've got 2,037 wells already drilled with a capital investment of $1.3 billion. We're only selling 10% of those wells, gas from 10% of those wells. As the wells are connected to pipe, more gas comes online, which is factored into the net present value I referred to.
Well, so it sounds like a big story. How are you affected by the gas market or commodity prices in that area?
So the lovely thing is that the Chinese government made a very important decision. Whatever gas price they pay for delivered gas to a foreign company, they will give to their own. So I can confidently say that the net value that we get in China is the best in the world. Our wellhead prices exceed $10 an MCF. Our costs are paid for by the government through a subsidy, which are still in the $2 to $3 range. And we've got a net cash margin of $6 to $8 an MCF comfortably, which, by the way, is higher than just the gross revenue one gets in a country like UK. So certainly we're in a very good place because China is a net importer of gas. And as it imports gas, it has to pay for the transportation cost. So the value proposition is greater because of the distances the gas is traveling.
So did you manage to do all these deals yourself, get all these arrangements?
Yeah, I was a lot younger when I started. So hair was black and I had lots of it. Now it's white and I'm still working through it. Yes, I did. We were fortunate to get into China in 1992. It was a very different China then than what it is today. But we've been consistently on the ground since inception.
Randeep Grewal, Chairman and CEO of Green Dragon Gas, good luck with your project. Send my love to the Chinese government. They sound like good people, and we'll see how you progress over the course of 2017.
Keep watching. Lots to come. Thank you for having us.